And thank you for joining us today. This is a Sedex webinar and it is our quarterly update on sustainable supply chain legislation. I'm thrilled today that we are joined by Richard, our guest speaker. So Richard Mojica, if we could just go to the next slide, please. Always tech troubles at the start, isn't there? Thank you very much. Richard very kindly is joining us today from Miller Chevalier Chartered, which is a law firm based in Washington, DC, where he is the practice lead. I am moderating and facilitating today, so my name is Bex Hall and I am the head of consulting here at Sedex. We're also joined by our Sedex colleague, Francisca Sassetti, who is our responsible sourcing consultant for the discussion today. So a little overview about the session today and some housekeeping before we dive right in. The session today is going to focus particularly on certain pieces of legislation that we've had the most questions about from our members and from within the industry in general. We're going to kick off with a brief timeline of the legislation we're covering today, what's current and what is upcoming to really distinguish what you need to do now versus what you need to be preparing for in the future. We're going to run an update on some key European directives that you may have heard of and give you a deep dive into those. We're then going to do the deep dive into the UFLPA or the Uyghur Forced Labour Prevention Act, which Richard is going to kindly take the lead on to share his insights with us. We'll briefly touch on the differences in approaches between the legislation we're seeing in North America versus what we're seeing in the European Union, before diving into a couple of other Q3 updates that we've seen in other pieces of legislation around the world. We'll finally wrap up with how Sedex is supporting businesses on all of these pieces of legislation and responsible sourcing due diligence in general, and open up for question and answers. In terms of the brief housekeeping, I believe all of the guests today are on mute, but please do not unmute yourself if you're able to do that. And please use the question and answer or the chat function on the GoToWebinar to submit your questions. You're welcome to do that at any point throughout the session, but we do have a designated section at the end where we will be answering those and providing that additional detail. If at any point you do drop out of the webinar, please just use the link in your registration email to rejoin again, and you'll be brought straight back into the space. Finally, just on an overview in the housekeeping, this is the first of what will now be quarterly updates on legislation that Sedex will be running. As I've gone through sort of the agenda, you'll notice that we are having a particular focus on certain pieces of legislation, and then the next webinar that we do will obviously focus on additional updates and perhaps other pieces. So any feedback that you have throughout on other things you'd like us to cover or questions pertaining to that, please do share them, and hopefully we'll see you next time as well. So with that, we are going to just quickly start off with a Slido poll. So for those of you who are unfamiliar, you can take out your smartphone or device and scan the QR code on the top left-hand side, or you can go to slido.com and type in hashtag SedexLaw to be able to access this poll. So I'll give everyone a few seconds to do that. You can see here the question that we're asking. Oh, fantastic, some people have started already. The question is your business ready to meet the requirements of EU and US due diligence legislation? There is no judgment here, it's all anonymous. It just really helps us as the presenters today, bringing this information to you to make sure we're pitching it at the right level and answering any questions you might have. Give it a couple of seconds just to gather some more answers. That's fantastic, lots of people are joining in. So predominantly it seems like people are answering that we're making a start, perhaps not totally sure what we're doing, but we're definitely starting, so that's fantastic. There's a group of people here who aren't clear what legislation they need to look at and what that actually requires. Don't worry, that's obviously part of the purpose of today. And then, yeah, there's also a group here that said, yeah, we're ready. So fantastic. I'm really glad that that's the state that you are in at this point. Really helpful to know. Give it another couple of seconds just to... Fantastic. Okay, so predominantly we're seeing that most of the people on the webinar today are somewhere in the middle of making a start, but obviously here to learn a little bit more. Brilliant. Thank you very much for that, everybody. I hope that sheds a little bit of light on the other people in the audience as well, and creates a safe space to know that you can also ask questions via the chat function and Q&A box. There are no silly questions. So the last part from me before I hand over to Francisca to deep dive into the EU directives that we're covering today is just this brief timeline that you can see in front of you. One of the questions we get asked a lot is, how do I prioritise? At what point is a certain piece of legislation coming in? What do I need to do about it, and when? We are going to give more details on the specific ones you see in front of you throughout this session, but we just thought it was helpful to pop it up and show everybody, chronologically what is currently enacted, what's in force, and where there are actual business implications and obligations right at this present day. The 2023 section with the German law put in there, that highlights fairly obviously that laws will come into enforcement and will start having strict implications as of 2023. That one in particular is January 1st for a lot of organisations. And then future developments, which we'll dive into a little bit more, but particularly we're there talking about the two upcoming EU directives and then also the Canadian human rights piece. We will give some more information on the dates that we do know around those at this point in time. But again, it's just to help align chronologically for people. These are the things I need to be addressing right now. These are the things I need to be preparing for. And these are the laws and directives that I need to follow the developments on to get ready to, comply with them in the future. So with that, I am going to pass over to Francisca. Thanks, Francisca.
Bex, and hello everyone joining us now. So in this section, we want to discuss the recent EU directives that businesses need to be aware of. When we say directives, we mean that these are acts that set out a goal that all EU countries must achieve. They are not necessarily yet laws, because it is up to the individual EU countries to turn these directives and incorporate them into their own laws, also known as transposition of international law. So the first directive we would like to get your attention to is the EU Corporate Sustainability Due Diligence Directive. So the draft for this directive was published early this year, and it just shows the EU's intent in promoting greater due diligence in supply chains for businesses operating within the EU market. So what is it? What is this new directive? So what this new directive does is to strengthen non-financial reporting by going a step further and actually requiring companies to conduct due diligence on human rights, environmental related risks and impacts in their own operations and supply chain well beyond their tier 1. When is it expected to come into force? We expect this to happen in late 2024 to allow for the EU to discuss and approve the directive, and then for countries to have a 2-year period to actually transpose it into their own national law. Why is then the EU coming forward with this directive? There was a need for standardizing corporate due diligence across the EU, which up until now was left to state members' own initiatives, which meant there were many gaps. Only countries that had some of these laws, such as France or Germany, had put forward some sort of due diligence and legislation and requirements, but most other countries hadn't. So it is to drive action across the EU. But it also aims to make it easier for European nations and countries to trade, as the directive intends to create laws to facilitate a level playing field for businesses of all sizes. So now, who will be affected or in scope of this directive? So we believe that, and as mentioned in the draft, EU companies with more than 500 employees with a global revenue greater than 150 million euros, or non-EU companies that generate this revenue within the EU market alone in the past financial year will have to report under the directive. For companies that are perceived as being in a high impact sector, the threshold is lower, which means companies only have to have more than 250 employees, and the revenue only has to be more than 40 million euros. Similar to the non-EU countries, this revenue has to be generated within the EU market. The directive is very clear on what they consider to be these high impact sectors. So these include manufacturing and wholesale of textiles, leather and related products, including footwear, food and beverage production, agriculture, forestry and fisheries, and also extractive industries, such as mining. And although companies from other sectors might not be directly mentioned in the scope of the directive, companies can still be linked to any risks of human rights, environmental harms and impacts. please. Perfect, thank you. So what we have here is just really a summary of what this is essentially of the scope, the implications for non-compliance, and how this directive will be implemented. So in terms of, if your business is not covered by this criteria that I just described, it can still be affected by the directive. The EU estimates that the directive will directly cover approximately 17,000 companies. But this number is likely to be an underestimation, considering that the number of large companies within the EU market is actually close to 250,000. But also there's the role of SMEs, which can be affected as suppliers to larger companies within the scope of the directive. In terms of the implications for non-compliance, some of the sanctions and fines that have been referred and indicated can be akin to GDPR, such as, for example, 2% of a company's global revenue. Other implications for non-compliance can be civil liabilities and also holding directors accountable for the actions and harms of a company across not just their operations, but also their supply chain. And finally, how will this directive or law will be checked or implemented? So currently the directive will be discussed within the EU, followed by the 2-year preparation period before it becomes effective in late 2024. If adopted, it will become effective from the 1st of January 2024 for companies that are already covered by the current non-financial reporting directive. 1st of January 2025 will be for the remaining large companies, and 1st of January 2026, hopefully, will be for SMEs and other companies. The enforcement will be up to the EU state members, and more guidance should be followed in the next few years. Next slide, please. So now what do companies need to do right now to respond and comply with the directive? So what we have here is a list of requirements based on the EU draft. So the first thing, companies must have policies in place. Integrate due diligence into policies and management systems as part of a wider strategy. An example can be a supplier code of conduct that has strong standards for your own operations and supply chain. The second step is identifying negative human rights, environmental risks and impacts, and conducting your own risk assessment. The risks to consider, as an example, can be forced labor, child labor, freedom of association, health and safety, gender discrimination and equality, corruption, land use, and emissions. Then companies are also required to then conduct some risk management and work actively to prevent and mitigate any negative impacts and risks. And if such risks or impacts are to be found and harms to be found, they must remediate any issues and aim to mitigate their extent to as much as possible, which is part of the prevention and mitigating risk and impact requirements. Companies must also establish and maintain a complaints procedure or whistleblowing mechanism across their operations, so available to their employees, but also available to their supply chain, meaning that they should also make it available to supply chain workers. Another requirement of the directive is monitoring evaluation. And this means monitoring the effectiveness of due diligence measures from policies to risk management, which can include audits, remediation, and grievance mechanisms. And the final step and requirement is communication. Companies must produce an annual report communicating their due diligence efforts, and more instructions should be made available in the next few years on how this can be done. So now onto the second EU directive that I would like to bring your attention to, the EU forced labor ban. You might have heard about this one recently, as the directive draft was published last month. So what is the EU forced labor ban? Essentially, it bans any products made fully or in part with forced labor from the EU market. Each EU country will select a national authority responsible for enforcing the ban and investigating products suspected of being made with forced labor. Businesses will be then asked to respond and prove due diligence on that particular product or commodity. When is it expected to come into force? We believe this will be in late 2025 to allow for the EU to finish discussions and finalize the directive, and then allow for a 2-year period for countries to transpose it into national law. Why is the EU putting forward this forced labor ban? So this ban complements the corporate sustainability due diligence directive that I just explained, which does not provide currently measures for preventing the circulation of products made with forced labor on the EU market. And currently there's also no way for state members and their authorities to directly detain, seize, or order the withdrawal of any product that might be suspected of being made with forced labor. So this EU forced labor ban aims to empower state members to be able to make those decisions and conduct those investigations. As we'll be hearing soon, it also mirrors current US laws, which will be discussed now in a bit by Richard. So who will it apply to? Essentially, it doesn't discriminate in the sense that it will apply to any product of any type, including any components, regardless of sector, origin, whether they're domestic or imported, or placed or made available on the EU market or exported. So any company, regardless of size or industry, might be affected by the ban. Next slide, please. To summarize, essentially, how the forced labor ban will work. So we believe that there are 26 million businesses operating in the EU market. Any of these companies, EU and non-EU companies, might be affected by the forced labor ban if they are sourcing products or bringing products into the EU market that might be made fully or in part with forced labor. In terms of the penalties for non-compliance, if any products are flagged by national authorities, businesses will have 15 working days to respond to any suspicions and prove due diligence. This might include whether a supplier has had an audit, for example. And how will it be checked or implemented? So the ban will be enforced by EU state members and appointed national authorities. But if a product is banned in one EU country, this means it will be banned across all 27 EU countries. This just shows the dimension and the impact of the ban. Next slide, please. In terms of what businesses can do or need to do right now to prepare for it. So the first thing we would recommend is working on investing in preventive actions. So preventive actions include improving supply chain visibility and conducting due diligence, not just at tier 1 of your direct supply chain, but also beyond that. We know that, and it is common knowledge, that the higher risk for human rights, environmental violations and harms happen at the lower tiers of supply chains, particularly at raw material level. Therefore, having that visibility, mapping your supply chain, can help you gain not only that visibility, but able to then conduct your supply chain as you start to map your business relationships. The second preventive action that we recommend is using risk-based approaches and data to inform any efforts and prioritize where you should be mitigating and preventing forced labor risks. So this includes identifying hotspots or forced labor trends or risk areas within your business, whether that is the origin of products or where they're exported to. In terms of corrective actions, as mentioned, if a national authority investigates and flag products with forced labor suspicions, businesses will be given 15 working days to demonstrate due diligence of efforts. However, if these are insufficient, if businesses are unable to prove they've conducted due diligence, they were either not aware of the risk or they have worked to mitigate that forced labor risk, they will be liable to financial penalties or other. The products might be banned, and there might be other forms of accountability at senior level as well, similar to the corporate due diligence, sustainability due diligence directive. So it's in a nutshell, this summarizes the upcoming EU directives that you should be paying attention to. And I will now hand over to Richard for a deep dive into US laws.
Fantastic, thank you, Francisca. I think we may have lost Richard. With that, Richard's section of the presentation today was around, and will be when he rejoins, around 5 things that you need to know for your business around the Uyghur Forced Labour Prevention Act, which is the UFLPA. This came into place in the United States, came into enforcement earlier this year. I believe it was around June. And has really rocked the sort of supply chain due diligence world for the United States and for organizations there. So to give a little bit of the history here, there is something in United States law, which is the Tariff Act of 1930, which is called Section 307. What this section does is it prohibits the importation of goods that are made either in whole or in part with forced labour. This is enforced through something called a WRO, which is the Withhold Release Order and the associated findings. Some people may be already familiar with that, others perhaps not so much. So when we talk about WROs and the withhold release orders, what they do is they allow CBP, which is the United States Customs and Border Protection Agency, to detain products that are in question of having been produced by forced labour until importers can demonstrate that that is not the case. So they can rebut that presumption, basically. Oh, here we go, Richard. Hi again.
Hey, I'm sorry, I'm having some technical issues, but
That's quite all right.
I can pick it up from here if you'd like.
Yeah, by all means. I just started to explain what WROs are. So yeah, back to you. Thanks, Richard.
Perfect. Thank you very much. So this is a complement to what Francisca was saying about the EU laws. We have a very active U.S. anti-forced labor law enforcement scheme at the moment that is rooted in two laws. One is the Bex was mentioning Tariff Act of 1930, 19 U.S.C. 1307. This goes back, a long time. It wasn't enforced until very recently, but essentially it prohibits the importation of goods made in whole or in part with forced labor, and that gave way to withhold release orders, which essentially are orders to that allow customs to detain merchandise if they have a reasonable but not conclusive suspicion of forced labor in an importer's supply chain. So this preceded the law that I'm going to talk about in more depth in a second, which is the UFLPA, or the Uyghur Forced Labor Prevention Act. Basically, we're talking about two big anti-forced labor laws in the United States. One is the Tariff Act of 1930, and one is the recently enacted UFLPA. In a nutshell, the UFLPA, which is what I'll discuss in a second, takes a lot of cues from the enforcement of the Tariff Act of 1930, in that it prohibits goods that are the importation of goods that are made in whole or in part with forced labor, and it is enforced by U.S. Customs based on reasonable but not conclusive suspicion by U.S. Customs that the goods in an importer's supply chain are made with forced labor. Are you hearing me now? Okay. All right. So I'm going to say quickly 5 things that I think you should know about the UFLPA. The first thing, actually, that I probably should have included in here is that the name of the law tends to turn off some people, or maybe make people think that it is more limited in scope than it really is. Of course, the purpose of the law is to address human rights abuses against Uyghurs. However, in practice, this law is all about supply chain due diligence in China across the board, and it affects if you are a company that imports merchandise that is sourced from China, it affects you. It is, I think, that broad in scope. So what is the UFLPA? Well, the UFLPA, in a nutshell, requires U.S. Customs and Border Protection to apply a rebuttable presumption to any product coming into the U.S. which, number one, contains any input from the XUAR or Xinjiang region of China, or two, it's made by, in whole or in part, by one of the entities listed in a list developed by the U.S. government referred to as the UFLPA entity list. So this presumption can be overcome, but doing so, as I've noted here, is virtually impossible given the extensive CBP documentation requirements. The good news, however, is that what we've seen so far is that most companies that face any detentions under the UFLPA are not trying to rebut the presumption, meaning that they're trying to say that the goods are not made from are in fact made from a Xinjiang entity or from the UFLPA, from a UFLPA entity, but instead they're saying, no, customs, you got it wrong, and there is really no such connection to the region or those entities, and therefore you should release the merchandise. Presumably that has a lower standard of review, standard of release, and every company that has so far been detained and is challenging the detentions with customs has gone down that path. But in general, if you do have to, importers that do attempt to overcome the rebuttable presumption must show through clear and convincing evidence, whatever that means, that no forced labor situated anywhere in the supply chain was used to produce any part of the goods. So this, of course, means that a company must be able to trace the production of the good all the way back to the first raw materials used to make that good. We'll get into that a little more in a second. The last bullet point that I point here is there is no de minimis exception, meaning there was a point kind of earlier on where companies, and I think where customs was debating whether it was okay to say, well, 95% of this good is forced labor free. We don't know about the remainder. That's probably okay. CBP has taken a very strong stance on this one, saying, nope, you got to demonstrate that the whole product is forced labor free, and as a result, that makes it all that much harder for an importer to prove its point. So that's number one. Next slide, please. Two, who's on the hook? I get this question all the time. The reality is that because this is a law that is enforced by U.S. Customs and Border Protection, only the U.S. importers of record are technically legally on the hook, meaning have potential legal liability for the importation or attempted importation of merchandise that is considered subject to the UFLPA. In reality, however, the hook, so to speak, extends beyond the importer of record because the importer of record, given the cascading obligations required by these type of due diligence laws, naturally ask their suppliers and their suppliers to their suppliers to certify that the goods do not come from the Xinjiang region, that they are not made from a UFLPA entity list, or the request can be broader. The request can be for a company to explain what they are doing to address forced labor concerns in their supply chain. That is an increasingly popular way to inquire into supply chain due diligence. And what this means practically is that we get a number of companies who are not U.S. importer of records, but instead are one or two layers removed, one of two tiers removed from the importer, who have to respond to the diligence they are exercising in their supply chain to look at their suppliers and their suppliers to their suppliers. So keep that in mind, because I think that's a very important aspect of this law. Next slide, please. All right, which industries are being targeted? By statute, the industries that are of highest priority and of immediate concern are cotton, silica-based products, and tomatoes. The customs has issued guidance for importers following the implementation of the statute that has essentially expanded the cotton to mean also apparel as a priority sector, and practically silica-based products. The material of main concern has been the polysilicon used to make solar panels. So in practice, what it has meant for us, kind of from a law firm perspective, is we've been working with a lot of solar clients and with a lot of apparel clients and most of the detentions within the apparel world concern cotton-rich products. Now, this is very likely to change. It's very likely to expand over time. It hasn't yet, to my knowledge, but for sure, we're seeing a ton of detentions, especially in those two sectors. Much less so in the tomato sector, which just by volume is smaller. But we have kind of every indication from the government that both the list of products and the entities, the UFLPA entity list, which is relatively small right now, it includes 12 entities and their subsidiaries and affiliates, is expected to grow at any time. So there's been rumors about who's next, and one thing we can say for sure is that customs is taking a lot of input from both private sector and NGO organizations who are presenting reports of their concerns around forced labor in the supply chains in China and other regions. So this is in the forced labor related reports coming out of NGOs in particular have been a very useful tool both for companies and for the government to zoom in onto certain entities and products that require more careful consideration. Based on that type of activity, we've already seen reports of concern around products like PVC, aluminum, lithium, and critical minerals used in the EV supply chain, and to a lesser extent, pharmaceuticals. All of this, again, is what we consider maybe a phase 2 of the implementation. We're still very much in phase 1. Keep in mind, this law came into effect only 3 months ago, and yet we're, based on some recent statistics from Customs, we're looking at, on average, something like 500 detentions a month. And so just given that and the fact that Customs has dedicated a lot of resources and funding around this program, we expect that just to continue to go up. All right, how is the UFLPA enforced? I included this because I recognize that on the EU side, there is not yet a mechanism that has been laid out, and my sense is that probably the EU and other countries who are considering or have implemented similar laws will look to something like the US system in terms of implementation. Bex is going to discuss some of the differences between the US and the EU system, but the way this generally works is Customs will detain merchandise that they suspect is tainted with forced labor. And again, this suspicion can be as a result of the due diligence that they have conducted, using tools like increasingly sophisticated software to investigate the non-Western supply chains, due diligence reports, and NGO reports, and also what competitors of industries of concern are informing Customs. So when Customs detains, when Customs has the suspicion, they have authority to detain, they issue a notice of detention to the importer, and that notice of detention lays out the documents that Customs wants to review to ensure that there's no forced labor in that supply chain. On this slide, we've laid out some of the documents that Customs requires, which are generally business, transaction-related documents that connect a supplier in one tier to the supplier of the next tier, and so on. So importantly, if you are a solar panel importer, you are expected to provide the documents that are set forth below for each of the tiers going back to the quartz mine. I mean, think about that. So from the solar panel to the solar cell to the solar wafer to the solar ingot to the polysilicon to the silicon metal to the quartz. You know, naturally, most of these solar panel manufacturers only have visibility and relationships historically till tier 1, tier 2, tier 3. So what this law has required in effect is for these companies and the apparel and solar and other industries to have to make necessary adjustments to inquire into the supply, into their suppliers and sub-suppliers to get the type of information that I've listed here: packing lists, bills of lading, shipping records, production records, inventory records, flow charts with production steps, transportation documents, and so on. So certainly kind of a very daunting task if you find yourself in the position of having to defend detention. All right, next slide, please. All right, and this shows quickly how the UFLPA functions in effect. I'll go back to something I said at the beginning. There's a detention. Once the detention notice is issued, the importer has 30 days to respond, at which point they can choose path 1 or path 2. Path 1 is, recall earlier I said, it's when the importer takes the position that CBP, you got it wrong. None of this product comes from Xinjiang or from a UFLPA entity list, and we're going to demonstrate it through traceability documentation. All these documents that we were just talking about, that none of the entities of concern are involved. Path 2, which is the path that what I referred to earlier as nearly impossible, is when the importer essentially recognizes that the product does involve Xinjiang or UFLPA entity material, yet says there is no forced labor in our supply chain, and we are going to rebut the presumption that CBP imposes pursuant to the UFLPA. All of this results in where I spend a lot of time, which is preparing admissibility packages, putting together all these documents showing traceability, inserting due diligence reports of the type that Sedex would prepare, and then you submit that to the U.S. government. That can take several months to review, even though maybe the process will get shorter over time. And then eventually CBP makes a decision of, are we going to release this merchandise, or are we going to exclude it, which means you can't import it. And if you can't import it, then the company is faced with the decision of, do we re-export it to another country, or do we destroy it? And interestingly, as of today, there's not many prohibitions around re-exporting into other countries, but for the reasons that we're discussing with these other legislation, soon likely these other countries are not going to want to, I think these companies are going to have issues re-exporting that merchandise to countries that have the same type of due diligence laws, and after merchandise has been rejected in the United States. I'll end by saying that there's an option for litigation if you're not successful admitting the merchandise through U.S. Customs, but it's a litigation that to date has not been on the UFLPA, at least. There's been no cases so far on that, so it's very much still kind of an area of development. Next slide, please. All right. This should kind of be a good segue for Bex and her team to discuss what companies can do to mitigate UFLPA risk. But I'll say that the key of all these items that I have laid out, probably the key aspect is supply chain mapping and due diligence. So this involves understanding your higher risk supply chains, figuring out, for example, which are the geographical areas, like for example China, that have the highest risk of having some indicators of forced labor, and then figuring out how you're going to conduct risk-based due diligence, which includes for those suppliers that are of greater concern, mapping, I went through what mapping the solar supply chain looks like, but basically you go back, you identify each of the various suppliers to that product and where they are located, and subsequently you conduct due diligence on those suppliers to ensure that A, you can get the type of documents that customs would request in the event of detention, and B, that you are running it through some type of screening platforms to see what, beyond what they can produce in the documents, there are no concerns out there in Chinese and non-Western media and so on. So mapping the supply chain using a risk-based focus and conducting due diligence of that supply chain is key among some of these other items that I'm listed. Happy to discuss them at any time. So sorry I've taken so much of your time and for the technical issues, but very excited nonetheless to be part of this inaugural series. Thanks, Bex and Francisca.
Thanks, Richard. That was super helpful to have it all broken down that way. And yeah, don't worry about the tech issues. These things happen even after so long of us all working remotely. I am a little conscious of the time, however, so I'm going to just sort of whistle through this. And as you alluded to, the differences between the US and the EU forced labour laws in particular and their approaches. It's fairly simplistic on the screen here, but I think some of the key learnings from hearing from Francisca, Richard, and then obviously the work that we do. The key point there, Richard, you made about a priority being mapping your supply chain and then conducting this due diligence. We absolutely agree. That's at the core of what Sedex does ultimately for all our members, but also particularly turning to this new legislation. It really is an essential activity for everyone to get on with, Sedex member or not. So a couple of quick things to note about the differences between the US approach that Richard has gone through and then the EU approaches Francisca mentioned earlier. At this point in time, the US approach is a little different in that, as Richard has mentioned, if a good has this presumption of forced labour on it, or it's in the US sort of entity list, goods are seized and detained immediately. You know, they're not allowed to come in, and you go through the process that Richard explained and showed us before. As it currently stands in terms of the EU legislation and what that will look like, there are several stages before that where in an EU member state process before a good would be detained. The sort of responsibility, if you like, in that due diligence onus is initially on the member state and their competent authorities, so border control, police, etc., importing authorities, to determine is this forced labour actually occurring. Once they respond to a claim or a suspicion, they have to go through, I believe it's currently penned at around 60 days, if not longer, but I imagine that will become clearer soon, of their own due diligence to determine is forced labour actually occurring in this supply chain, in this situation, before they turn to the business for them to then say, well, this is our view, this is what we've done, this is our due diligence. That's obviously quite different at this point from the US version, where that assumption is made and it's immediately over to the business to try and take the route one or two away from that. I think another key thing to note, particularly here, is that obviously with the UFLPA, this is a federal law and it's applicable across the whole of the United States, whereas the directive, as Francisca mentioned, is always transposed into national law. The national laws will capture the essence and the requirements of that directive, but exactly who will enforce it within a country, exactly what that will look like and how they have those relationships with businesses is yet to be seen through that transposition. As we've pointed out, the UFLPA is already in force, so it's already having impacts on business at this point in time. And from the EU forced labour ban perspective, that's expected to come in 2025. So there will still be some alterations and feedback on the proposed directive before that comes into place. With that, we're going to pass over to Francisca to go through some of the other laws that have had updates in this last quarter. We will then try to wrap up with how Sedex supports businesses with the variety of laws and dive into some of the questions that have been submitted. Thanks, Francisca.
So we would like to briefly go through some relevant laws to look out for as we reach the end of the year. So the first one you see on the screen is the UK plastics packaging tax. So you might have seen it on the news or heard about it. So it entered in force this year, and it applies to any companies manufacturing and or importing 10 or more tons of plastic packaging into the country containing the less than 30% recycled content, and even if these are biodegradable or compostable plastic. The tax is charged at £200 per ton rate, and there are fines that can go up to £15,000 a year. The second law I'd like you to bring your attention to is the UK Green Claims Code, also known as the UK Greenwashing Law, and it ensures that any environmental claims on goods and services are not misleading for customers and have to be substantiated if required. Any business claims must be truthful and accurate and follow what the UK sets as the Green Code on any sustainability claims on product. The legal power comes to the UK customer protection laws, and companies can be investigated for any misleading claims. Then we have the Norway Transparency Act. So this act entered into force in July this year, and it requires companies to conduct due diligence on human rights across their operations and supply chain. They must also produce an annual report on these efforts and make this information available on their own websites. Then we have the German Supply Chain Due Diligence Act. This act requires companies to identify risks of human rights violations and environmental harm and destruction at direct supplier level, but also lower tiers of the supply chain and direct suppliers. Businesses are required to document their due diligence efforts and produce an annual report and submit it to a federal office, which can then issue fines if companies violate their due diligence obligations. It applies to companies with over 3,000 employees or more from the 1st of January next year. From 2024 onwards, it will apply to companies with 1,000 employees. And it applies not only to German companies, but also any businesses with subsidiaries and offices or joint ventures in Germany. Finally, on the screen, we have the Canada Corporate Responsibility to Protect Human Rights Act. This law that has been tabled in February 2022 would require companies to undertake human rights due diligence, including review of all their business activities, social and environmental risks, and take steps to mitigate these risks and to ensure remedy for any harms. It would apply to any company legally conducting business in Canada. That's a quick overview of these laws.
The whistle stop bulletin, great. Thank you so much, Francisca. I think I said this at the start, but in case I didn't, there will be a recording and the slides made available of this session afterwards. So if anyone didn't quite catch any of the information we've gone over today, you will be able to access that on demand afterwards. Thank you so much for that, Francisca, super helpful to pick up on. It's also good to know that certainly on the Sedex website, we do have distinct articles and guidance on all but one of those laws, which is the greenwashing code, which is coming shortly. But there is articles and guidance about that on the website for you to check if you want further information. And of course, please do reach out to myself, Francisca, or the consulting team if you do have any other detailed questions about how to respond yourself. So the final section of this, before we turn to the questions, is how is Sedex helping businesses, as we've alluded to. So there are a range of activities here that highlight what Sedex does to support businesses to go and support them towards achieving compliance, but also to go beyond it as well. For those who are familiar with Sedex, you will know a lot of these tools exist already, and for those who don't, I'll run through them briefly now. The core areas that Sedex supports organisation in complying with due diligence legislation, but ultimately enacting due diligence on their supply chain are shown here. We support organisations using our platform to map their supply chain and high-risk areas. We create a lot of proactive engagement between key stakeholders within the supply chains of different businesses and other entities to really foster transparency, sharing of information, and effective risk management and mitigation. The documentation and sort of audit in the sense of social audit, but audit trail in terms of documenting these processes are also things that we support organisations with through our tools and services. We're also able to support organisations in terms of demonstrating, communicating and reporting this progress, whether that's against your strategies and goals, or as we've discussed today, in terms of legally mandated disclosures. If we could jump onto the next slide briefly, you will see that there is a wheel in front of you. What this shows in front of you here in the red sort of blobs, if you like, around the circle are the different elements that these due diligence laws require of organizations around the world. Not every single law requires this, but broadly speaking, these are the commonalities that we will see. At each of these stages, you will see where Sedex either has a service, a tool, or a combination of the above that supports organizations towards responding to this due diligence legislation and to embed sustainable and responsible sourcing into their organization. To pick on a couple of examples rather than run through all of them, some of the key ones that we've talked about today are around risk assessment and ensuring you're monitoring your supply chain and assessing the risk. You'll notice there that we are able to support that through a number of our Sedex tools, such as Sedex membership, Sedex radar, risk assessment tool, and inherent risk, as well as from the consulting team, so myself, Francisca, and our colleagues. At the other end of the spectrum, you can see at the sort of 9, 10, 11 o'clock of that wheel, we point out that we're able to support organizations with communication and reporting. Again, sometimes using the digital tools that Sedex has available to pull your data and bring it to life to communicate this, but also in terms of the written disclosures that might be needed as well, and legal statements and mandatory disclosures there. With that, I'm conscious we have had quite a few questions and we're on about 6 minutes left, so I'm going to dive in. I'm going to skip through the case studies, I think, and we will dive straight into the questions to make sure that we cover those for everybody. If anyone is interested in learning more about the work that we've talked about today, both from Richard and his practice and also the Sedex organisation, of course, please do reach out. So some of the top questions that have popped into here today, I will just read them out and allocate them to our teams. So Francisca, the first one I think would be great for you to take is, what should I do as a first step to understand which of these laws apply to me? There are so many and it's unclear how I understand what I should be doing.
Great question, Bex. So the things what we would say and the way we work at Sedex Consulting is you first should do an initial assessment of not only where you are currently operating, but what are your biggest markets or selling to, or your suppliers, where they're located. And so with this information, you should do an assessment, what we at Sedex Consulting call a legal diagnostic or legislation diagnostic. And that helps you to identify where are all the upcoming laws that might be applying to your business right now or in the near future. This should also include whatever business ambitions you have. Let's say you are a European company planning to open a business location in the US. So that would also mean that you might have to comply with some of the US laws affected by the US import ban. So in that sense, you are trying to prepare for what might be coming your way, linked to your ambitions and what you currently, the state of your business now as well. So this is the first step we would say, and obviously I understand people might not have this expertise in-house, so hence the need for reaching out to support, such as Sedex Consulting or other services, to help you understand essentially what are some of the laws that are coming away, but others that you should be complying right now that maybe you're failing to comply with as well.
Great, thank you. Question for Richard that we've had through. Are companies that use a lot of materials from high-risk sectors, in inverted commas, at more risk from this legislation, such as the UFLPA, for example, using mined metals? Could we pass that one to you, please? Oh.
Yes, I certainly. I think that this will be what that means is a developing question. At this point, the high risk sectors tend to be very clearly defined. Yet companies are treating this, as I mentioned, as a broader China due diligence issue. And given some concerns around some of the sectors that you may be referring to, such as the critical minerals sector, what's also known as rare earths, there may be there's a higher kind of focus on that right now, and companies are doing more and focusing more around those issues. So I think it's a developing question. It's a question that you should continue to ask and monitor to see which are which are the sectors that are considered higher risk from an enforcement perspective, as that will likely influence kind of how this law develops.
Great, thank you. And yeah, I think to your point, it is a developing thing. And obviously we're noticing that within the EU proposed directives as well, that there are now highlighted high risk industries or sectors there as well. So as you say, the definition of those and how that is determined as a high risk industry is going to be really important moving forwards. There is a final question which I will take myself, and then we will have to wrap up for today. And that question has been around, will the UK be moving away from EU's legislation now that we are post-Brexit? Really, really good question. As most people know, our government is turbulent at the moment, so it's a little difficult to predict exactly what's going to happen there. However, the advice that we give people that's broader as opposed to on a case-by-case basis is to take a look at not just what the European legislation is, but what it is in place currently or is likely to be in place in the countries that you actually either import or export into and the trading and business relationships you have. We've obviously mentioned some laws already, such as in Germany and France. So really taking a steer and a lead from that sort of legislation and the requirements that sit there is a really great place to start. Having conversations with either your own council or with industry experts or trade bodies is also, they're usually sort of hot on the knowledge of what is coming down the line. We will certainly put out any information and guidance we have as soon as we have that available on EU, UK sort of trade and law regulations there. I'm afraid with that, we are now at time. So thank you so much, everybody, for joining us today, and particularly thank you to Richard for joining and sharing your insights on the UFLPA and US legislation. It's been a pleasure to have you here. As we mentioned, please do reach out with any questions, feedback, either in the chat function, or you have email addresses in front of you here, or you can find us on LinkedIn. We look forward to seeing you at the next quarterly update and to bring you new news then. And in the meantime, please do take care, stay safe, and we look forward to speaking again soon. Thanks for joining. Goodbye.
Thanks, Bex.